For more on on that cut and what could come next, we want to bring in former Fed Governor Dan Tarullo. He led the Fed's regulatory reforms in the wake of the financial crisis. He's now a professor with Harvard Law School. And Dan, welcome. You said you were surprised that anybody was surprised that they went 50 basis points yesterday. Why is that?
Well, 10 days ago, Becky, I think quite a few people would have been surprised. The betting then obviously was on a 25 basis point cut. But after you have stories that were pretty clearly well backgrounded, published by two top print journalists saying that 50 was in play, I think that was just the signal from the Fed that we were headed towards 50. And if they had moved 25 yesterday rather than 50, I think there would have been some negative reaction among people who had come to believe it was going to be 50. And I think what that tells us was that there was a robust debate, even after Jackson Hole, as to whether they were going to go with 25 or 50 basis points. Finally, when the chair concluded that he had the votes and the support to do it, I think that's probably then that they did some of the backgrounding in order to get the markets prepared for the larger cut.
Dan, that's a little, it's just an interesting narrative on how things happen, because we talk sometimes about how or question whether the markets are leading the Fed around by the nose, but you certainly make it sound like the Fed is leading the market around by the nose, and maybe in particular the chairman. If he wants a 50 basis points cut, the way to do that is to signal it ahead of time, even if there are people who don't agree with that who are going to be in the FOMC meeting, including the one dissent that came yesterday. That's the first time in 19 years there's been a dissent.
Yeah, I mean, I think he was, in all probability, talking a lot with all the members, the voting members in particular, but all the members of the FOMC. And I don't think, Becky, it's so much leading the market by the nose. I think that the Fed generally, and Chair Powell certainly, I think likes to be able to move forward with relatively few surprises.
So that there's a calm reaction instead of an unnerved reaction?
Yeah. Exactly. And if, I mean, just let's do the counterfactual. If they had raised by 50 yesterday without those stories in the Journal and the Financial Times, there would have been a lot stronger reaction, right?
Right. Right. I think that's probably true. And I think his comments yesterday were very measured and aimed at trying to prevent a strong sell-off reaction, people saying, oh, no, what do they know that we don't? He talked about the strong economy. He talked about the strong jobs market. But it was a little disjointing to watch that if you've been watching these things for a long time. If the economy is so great and the job market looks like it's hanging in there and you think things are going to be OK, why are we cutting 50 basis points? It's not the script that's been laid out over the last several decades. If things are going OK, but you're feeling a little restrictive, you move slowly, 25 basis points at a time. Why go 50?
Yeah, I think here, Becky, a couple of things. First, I think we saw yesterday the Fed pivoting pretty obviously towards a more future-oriented approach to monetary policy. Over the past couple of years, they've been very data-dependent, but the data is basically the data that's already come in, and that's what they've been looking at and emphasizing. Now, as Chair Powell said yesterday, they're trying to look forward and to avoid a slowing labor market turning into a deteriorating labor market. So that's number one. Number two, a lot of people, myself included, rather thought that a first cut in July, in my case in June, would have been appropriate. And so I think in some respects, the 50 basis points was an acknowledgement of that and a bit of catching up. Obviously, Chair Powell wasn't going to say we're behind the curve, and they're not really behind the curve. But I think it was just a way of trying to get themselves on this path to a preemptive strategy of putting a floor under the changes in the economy. And one further thing to note. In his opening statement yesterday, remember, Chair Powell said that with this move, they were reducing the degree of policy constraint. But that was emphasizing that rates are still restrictive relative to what you would expect in a steady state.
The chairman was also very clear yesterday that they are looking at the second of their mandates pretty closely right now. They've shifted from inflation and are now looking at the labor market. I guess my question would be is they're not at 2% yet and aren't expecting by their own projections to get to 2%, the target 2% inflation until 2026. There's a lot that could happen between now and then, and I would point to the potential strike at the ports October 1st as being something that could very quickly push inflation back through the supply chain.
Yeah, a couple of things. At first, Becky, this gets back to the theme of being forward-looking and now projecting the direction that inflation is going and maybe having a bit of concern about the direction that the labor market would be going with so constrained a monetary policy. Obviously, as the chair said yesterday, they're not pre-committing to anything. They're starting a path, and they will, meeting by meeting, assess economic conditions to see whether those are going pretty much as they expected. With inflation generally, you have to distinguish between things that are kind of one-time hits to inflation, sometimes one-time hits that get reversed, or things that begin to embed themselves in the economy and produce more inflation. And while one never knows in advance, things like strikes tend to be one time in supply side sense. Whether they end up being one time in demand side sense obviously depends on how the strike is concluded. But I don't think that the prospect of things that might happen on inflation, or for that matter on jobs, it undermines the position that Powell took yesterday. They've got a path, but obviously they're not going to slavishly adhere to that path.